What's up, guys? Welcome to today's video. On this video, I'll be talking about pips. Please smash the subscribe button and turn on your notification for well-detailed video as regards the forex market. And just like my previous video, this YouTube channel promises to be a wealth of knowledge for forex traders, starting up from the ground up for basic learning. Now, what is a pip? A pip is a word that flies everywhere, and every trader needs to be abreast of what this entails. A pip is the numerical representation of the market. It is an acronym for percentage in points and is used for calculating price movement. They are usually arranged at the right part of your screen with digits. These digits or numbers represent the market numerically and are used for calculating. A pip is usually represented with 4 decimal points for major currency pairs like the USD, United States dollars, the euro, and the Great British pound. But for some minor currencies, it is represented in 3 decimal points. The following are numerical representations of pips: 1.25348, 0.61925 for major currency pairs which has the USD in that pair, while for exotic pairs that has JPY, it is represented as 1.72.050, 1.93.417, etc., etc. Then for commodities like gold or silver, they are represented as 320, 4 decimal before the point, because these are calculated in grams and their value are reflected by the price per gram. How to calculate a pip? This is a graphical illustration of how to accurately deduce the pip movement. We have 1.25348. When calculating for a pip, the last digit is usually taken as 0, meaning irrespective of the number of that digit, it is regarded as 0 because it is non-entity. They are regarded as pipettes. Just like you have different words for different measurements: kilometer, liter, centimeter. These are ways for measuring various objects or substance. In the forex market, the measuring tool is regarded as pip, and this is how to calculate them. You take the last number as rounded up to be 0. Then the number following before that last number is regarded as 1. The number before that number is regarded as 10, represents 10 pip movement. The number before that number represents 100 pip movement. And the number immediately after the decimal represents 1,000 pip movement. So I'm incrementing either of this number gives you the respective numbers written down here. If the price changes from 1.2534 to 1.2535, means there has been an increment by 1 pip. If it changes from 1.2534 to 1.2545, means there is an increment by 11 pips. The price changes to 1.2645, means there is an increment by 111 pips. Now, like I wrote here in blue, If this price changes to this from 1.25348 to 1.3645, if you pay keen attention, you notice that each of these digits has changed, increased by 1, meaning price has gone up by 1,111 pips, because 2 became 3, 5 became 6, 3 became 4, and 4 became 5. Same thing happens if price changes below this to 1.1423, means price has gone down by 1,111 pips. Mind you, a 50 pip increment of price can be very, very profitable. So we are not just looking towards chasing higher number of pips. If we end up having that, good. But on an average day, a 50 pip movement, a 100 pip movement can be very, very profitable, depending on the lot size you are using for that trade. Then for JPY pairs 193.417, as usual, the last digit is taken to be 0. Then the number before that digit represented as 1. The number before the last digit represented as 10. The number before the decimal represented as 100. The number before the decimal is represented as 1,000. So if the price changes from 193.417 to 193.427, means the price has changed by 1 pip. If the 4 changes to 5, it means the price changes by 10 pip. If the price changes from 3 to 4, it means the price has changed by 100 pips, and so on and so forth. And just like I wrote down here, if the number from 193.417 changes to 194.527, means price has gone up by 111 pips. If the 9 changes to 2, means the price has changed by 1,000 pip. I don't know if you understand. Now for a quick recap, a pip is a numerical representation of the market. It's an acronym for percentage in points, and is used for calculating price movement. And the pip is usually represented with 4 decimal points for major currency pairs like the USD, Euro, GBP. But for some minor currency pairs, it is represented in 3. And I gave an example. If you find this video informative, please smash the subscribe button, turn on your notification for subsequent videos like this. I promise to take you from a journey by the very foundation of a forex trading to becoming a profitable trader. Thank you for watching. See you on the next one. God bless.